What's up everyone, it's Scotty with Money Investing. So the market is now starting to flip a little bit when it comes to rates expectation, rate projection here. So we're going to break down what the market's expectations are moving forward for interest rates because we've got the next meeting coming out, I believe on June 13th and 14th is the next FOMC meeting, so not that far away. And of course, we'll talk a little bit about the rate cuts and what the expectations might look like from a Federal Reserve standpoint as well. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month. There's only 4 or 5 days left with limited spots, so link's going to be down below if you're interested in joining us. So this right here is going to be the current target, the Fed funds futures right now. And right now there's a 61% probability that the Federal Reserve is going to pause on their next meeting on June 14th. So June 14th is the next meeting. I think inflation numbers come out on June 13th. So we might have, a little bit more insight into what the Federal Reserve is planning to do. Of course, with inflation numbers already printed before the Fed's meeting, right? Or during the Fed's meeting, because it's a 2-day event. So June 13th and 14th is when the Federal Reserve is going to be meeting. And June 14th is, of course, where the statement's going to be released and the press conference is going to happen. And I believe this is also going to include the Summary of Economic Projections. I got to double check, but I believe it's also going to include the SEP. But 61% probability for a rate pause and 39% probability this has actually increased from when we visited this last time. If in fact, at one point during the day, this was actually higher. There was a higher probability that we were going to see a rate hike in June of another 25 basis points. What's even interesting is that right now the markets are pricing in rate hikes, not in June, but in July. So if you come over to the expectations for July 26th and September 20th, markets are pricing in a higher interest rates at 5.25 to 5.5%, and right now we're sitting in the range of 5 to 5.25%. So markets right now are certainly pricing in a 25 basis point hike in the next few meetings here starting July and then staying there in September. They're still pricing in a significant amount of cuts, but we have moved up on that cuts timeline, and we've also moved up on the lowest level that we're going to come down to when it comes to rate cuts, because the markets were pricing in 3 to 3.25% at one point with 9 rate cuts. And I believe now we're pricing in 7 rate cuts and a 3.5 to 3.75% as the lowest number. So I want to give you a little bit of an insight into what actually transpired here, what actually happened. We have gone from 9 cuts. Let's just start from the beginning. The markets have gone from a pause and 9 cuts and a low level of 3 to 3.25% to 7 cuts to basically, again, let me rephrase, to a rate hike and then 7 cuts and then a low level of 3.5 to 3.75%. So markets got more hawkish. Markets expectations got a little bit more hawkish. It wasn't the Fed who's changing the tone. It is the market that's actually repricing and resetting expectations to what is potentially going to happen with interest rates. So remember we talked about how there is a discrepancy, and there still is a discrepancy between the market and what the Fed is telling us. The Fed is telling us no to rate cuts. They've multiple times Jerome Powell has told us rate cuts are not going to happen, rate cuts are not going to happen, and yet the market keeps pricing in rate cuts. Remember that discrepancy that we talked about? That will eventually resolve itself, right? And that's what we're seeing happen right now with the market's expectations. That's exactly what's happening with the market now pricing in rate hikes, 25 basis points in July, staying there in September, and now we're only pricing in 7 cuts as opposed to 9 before, and we're also pricing in a much higher, lower level at 3.5 to 3.7%. In fact, on just a little bit under 4% as opposed to at close to 3% last time we visited these numbers. So markets shifting a little bit. That's what's happening. Markets kind of flipping its expectations slightly more hawkish and kind of aligning itself more with the Federal Reserve, more with Jerome Powell, because there's still a discrepancy. It's just a little bit less than what we saw before. Now, I also want to go over what FOMC members mentioned. So Fed staff forecasted a mild recession later in the year, followed by a modest recovery. However, several participants mentioned that if the economy evolves as expected, further policy firming may not be necessary. So again, further policy firming, meaning further policy rate hikes, may not be necessary if the economy evolves as expected. And if there is a potential recession, they are most certainly going to pause And some participants in the Fed minutes stressed the importance of avoiding signaling rate cuts or ruling out further rate hikes in the policy statement for this year. And the extent for further interest hikes became less certain as well. So they became less certain, but they're obviously not out of question. And participants expressed uncertainties about the extent of the impact of the banking sector stress on economic activity. And they also acknowledged concerns about high and declining inflation, as well as the potential risk posed by the federal debt limit as well. So a little bit of fiscal, a little bit of monetary policy. This right here is a video that I did 8 days ago. Not a lot of views, but I highly encourage you to check that out because it basically goes over what's the motive, right? We're putting ourselves in the minds of Jerome Powell and other Fed members, and we're really asking ourselves this very simple question: why would the Federal Reserve cut rates? What's the motive behind cutting rates? So that's addressed in this video, and it'll give you a little bit more insight into why we shouldn't really be falling for these rate cuts yet, right? Because every time the Federal Reserve cuts rates, you have to think about this from the perspective of the Fed. Every time they cut rates, what are they cutting rates for? What is the motive? What are they trying to solve with these rate cuts? There are only three things, right? It's either a crisis, it's either a recession, or it's deflation. Those are the three things, at least in my book, is what I believe. Those are the three main reasons why the Federal Reserve cuts rates. If there's any other reasons, maybe there's political pressure, maybe. But those maybe, okay, so 3 plus half a reason, right? That there's political pressure. But those are some of the main reasons why the Federal Reserve would cut rates. Nothing else, right? There's no other incentive or there's no other motive for the Federal Reserve to cut rates. They're not going to cut rates just for the sake of cutting rates, right? They're not going to spur the economy just because they want to, right? Just because they feel like it one day. No, they need a motive. They need an actual reason to do it. And right now, we don't have a recession. We certainly don't have deflation. And maybe there is a banking crisis that may evolve into something bigger, but nothing yet. So they don't have a motive to actually cut rates. So, markets eventually will kind of understand that. And right now we're already starting to move a little bit away from that very, very dovish, very, very rate cut scenarios to a little bit less. But we'll continue to monitor how the markets sort of expect, interest rate projections, how they evolve over time. But let me know in the comment section down below, what do you think? And again, this is not anything bullish or bearish. This is just me trying to explain markets' expectations and what Jerome Powell and Federal Reserve is telling us. Anything can end up being bullish or bearish, just depending on how the economy ends up doing, how the earnings end up doing, and of course where the sentiment ends up being eventually when the rate cuts actually do happen. Because remember, rate cuts happen during times of distress, right? Recession, crisis, and deflation. And during those times, earnings are also expected to fall. So it's not really, rate cuts cannot always be seen as being something as bullish, right? Just like rate hikes are not always bearish, rate cuts are not always bullish for the market. Just so we are clear on that, I think it's better to understand that, just because markets are pricing in rate hikes here, doesn't mean that that's actually bearish, right? And just because markets are pricing in rate cuts all the way down, doesn't mean that that's actually bullish. I'm just trying to explain the market's expectation relative to what Jerome Powell's told us. So that's where we are. Let me know your thoughts down in the comment section below. What do you think? I do still believe there is going to be a potential recession on the horizon, of course, with AI and everything that's going on. Everybody's starting to kind of forget about the recession. But I do still believe that with the high interest rates, with the lag effect that's going to take place, it's going to take months for a lot of these things to play out. I wouldn't be surprised if a recession potentially takes place at the end of this year, early next year, and then eventually we start to see a little bit of a pullback maybe on the earnings side. And of course, the Federal Reserve will have a reason, will have motive to actually cut rates, and that could actually spur some growth in the economy, kind of put it back on the strong footing, considering inflation is down, and that will be a perfect recipe for a very nice move to the upside for the markets. So I hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining us. 16% annual discount available till the end of this month. And again, as always, happy investing. I'll see you all in the next video.